Hello and welcome to my channel. Thank you for clicking on my first video. Let's jump right into my real investment strategy. Today I'll show you exactly what I'm investing in and I explain why I chose this particular stock. But first, let me quickly walk you through my investment methodology, which is pretty much influenced by one of Warren Buffett's key advice. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Also, I don't own a diversified portfolio. Instead, I focus on a select few companies because, as Buffett said,
as practice generally makes very little sense for anyone that knows what they're doing. Diversification is a protection against ignorance.
With this important advice in mind, it's essential to make well-informed decisions when selecting companies. That's why, to guide my investment choices, I use a simple checklist inspired by Buffett's methodology, which we are going to go through here. For a more detailed analysis, I recommend checking out my playlist where I break down each of these points in detail. And as a case study, I'll be using the same company we are discussing here, so you can see exactly how I analyze and evaluate stocks. Now, before we begin, I have a confession to make. This particular stock pick doesn't quite align with Berkshire Hathaway's ethical guidelines because, as Charlie Munger said,
harmless amusement in the casinos, but there's also a lot of grievous injury that is deliberately caused by the casinos. It's a dirty business, and I don't think you'll find a casino soon in Berkshire Hathaway.
And yes, you guessed it. It's a gambling company called Evolution EB, based in Stockholm, Sweden, is a leading B2B provider of live online casino systems and games, operating across Europe, North America, Asia, and Latin America. They have a dominant position in the e-gaming industry, making it a key player in providing software for live gaming experiences, and its market cap exceeds 22 billion euros. They specialize in live casino and RNG, random number generator games, for online and physical casino operators. The company operates 17 studios globally, offering its products to a wide range of casino operators with a huge track record. Business model captures the industry growth with lower risk, making it a compelling investment opportunity. Alright, so let's talk about the CAGR, the compound annual growth rate of the company, which makes the evolution very impressive. CAGR is a financial metric that helps to figure out how much an investment has grown on average every year over the set period. I'm going to use the 3, 5, 7, and 10 years period. Now, what makes CAGR useful is that it smooths out the ups and downs. So even if there were fluctuations like a drop one year and a jump the next, it gives you a clearer picture of the overall growth trend. It's like looking at the big picture for the long-term investment. If you want to know more about how I calculate the CAGR, you can check it out in my playlist. In those videos, I will explain with different formulas, Google spreadsheet formulas and functions, how you can calculate and evaluate different companies. So let's check out the growth numbers, the growth rates. The compounding growth rates of Evolution for the 3, 5, 7, and 10 years are very impressive. You can see the net income or earnings growth rate is 51, is in the 60s. The sales growth rates are 56, 54. These are very impressive numbers. The book value per share begins at the 3 years, begins with 78% and ends at the 10 years period, ends with the 81%. To give you a comparison, I know it's not the same industry. We can see the growth rate of Microsoft. Microsoft doesn't have these impressive numbers. Now let's talk about an important metric, which is also part of Buffett's investing list. He has repeatedly said that focusing on earnings growth, particularly earnings per share, EPS, can be misleading when evaluating a company's performance. In his 1979 letter to shareholders, Buffett explained that the increase in Berkshire Hathaway's EPS that year was mainly due to having more capital to work with, not better operational efficiency. Buffett prefers focusing on return on capital employed ROCE, or return on invested capital, ROIC. These metrics show how well a company uses its capital to generate returns. He believes the key metrics for performance is the ability to generate high returns on equity capital, not just earning growth. High returns on capital above 15% are a sign of well-managed companies. If you check out my playlist, I will show you all these formulas, how to calculate them and how to get the data. But right now I have all the percentage rates. We can interpret them. A data of a 10-year period from 2012 to 23. It starts with a high number, 76, 66, 57. And at the last year, we had a 24% rate. There is also a chart generated from these numbers. Even though it has a decreasing trend, as you can observe, we can be sure that these are very high numbers. Next on our Buffett checklist is the question, are the profit margins attractive? To answer this, we'll take a look at Evolution's net margin rate. We simply divide the net income by the revenue, which shows how effectively the company converts revenue into profit. Evolution AB has demonstrated consistently stable net margins, around 50% in the last 4 years. This is once again a very impressive financial data. Company is very stable. It suggests that the business has a very strong pricing power and cost controls. If we generate a chart from these numbers, we can see that we have a consistent growth. The next thing that we are going to find out is whether the company has a consistent earning growth. For this, we are going to check out the earnings from continuous operations from 2014 to this year's current rate. So you can see starts with 50% earning growth, which is very consistent during 3 years. From 2014 to 2016, and then we have an outlier number. In 2020 and 2022, during the pandemic, we had another outlier year for the company, and then it went back to normal in the last 2 years or the last 3 years. We had a 31 and 31%. So what we can conclude from these numbers, that we have high fluctuations. We need consistent growth because when we evaluate the company and we assess future growth, we need consistency. But my final opinion is that we have very high numbers. We cannot really see these numbers, earning numbers, in other companies. Now we are going to answer 3 questions on Buffett's list. The first has to do with debt. To see if the company is solvent, we will check out the debt to equity ratio. This ratio is simply the company's total liabilities divided by its total equity. What it tells us is the balance of equity versus debt that the company uses for its financing. In this case, we see a low debt to equity ratio under 0.5, which is exactly what we would expect for a capital light business model. But what does capital light actually mean? Well, instead of investing in heavy assets like property or machinery, things you would see with capital expenditures, Evolution AB channels most of its funds into operating expenses or OPEX. The company relies more on equity than on debt, which can be seen as less risky. These OPEX costs include things like expanding their workforce, marketing efforts, or R&D, research and development. Most of Evolution's costs come in the form of labor force. Now we are going to talk about the cash flow. When we look at the cash flow of Evolution, the numbers show an impressive exponential growth over the 10-year period. If we look at the year-over-year rates of operating cash flow, very high percentages are presented. One of the most notable features of Evolution's cash flow profile is its low capital expenditure, or CAPEX. In the last year, the CAPEX was just 94 million euros, representing roughly 8% of the operating cash flow. This low CAPEX translates to around 92% of operating cash flow being converted directly into free cash flow. These awesome numbers shows Evolution's ability to retain a large portion of its earnings. Now let's check out Evolution AB's strong moat and let's understand their business. In the world of online gambling, Evolution Gaming stands out as a key player. They are middlemen between casino operators and players. Big names in the industry like AAA casinos or PokerStars use Evolution's platform to offer their games to players. We are talking about live-hosted blackjack, poker, roulette, and even RNG random number generator slot games, all with unique themes and customization options for the e-gaming industry. Players log into the casino operator's platform and participate in different games provided by Evolution. Whether players win or lose, the money lost to the house goes to the operator. Then the casino pays Evolution based on the pre-arranged fee structure. They serve a wide range of gambling businesses with a huge, for example, 60% market share in Europe and the largest share worldwide. These games are highly customizable. Operators can present games under their own brand or under Evolution's. This flexibility, combined with Evolution's extensive portfolio, positions them as a one-stop shop approach, which is a big win for operators who want to cut down costs by reducing the need to coordinate with multiple suppliers. What's interesting is that Evolution manages everything from development to deployment. This adds real value by raising switching costs, creating network effects, and giving Evolution pricing power in the market. Switching costs are significant in the live casino industry, particularly for casino operators. The convenience and the variety of Evolution's offerings mean that operators find it hard to switch providers. Casino partners get not just one game, but an entire all-in-one product. These advantages make it difficult for small companies to compete, especially when considering the high fixed costs and expertise required to set up live casino operations. Currently, Evolution runs over 1,300 live tables worldwide, with studios streaming content non-stop 24/7, 365 days a year. Their revenue model is twofold, involving commission fees, typically 10% to 15% of a casino profits, and fixed fees for live tables. For tables customized to a particular operator, this fee increases, adding to Evolution's robust income streams. Also, they charge setup fees for new clients. Their revenue is structured around three key streams: commission on casino profits, monthly fixed fees for exclusive tables, and initial setup costs. Finally, the last key element of Evolution's competitive advantage, or its moat, is the engaging experience it creates for players. This not only makes players keep coming back, but also makes it much harder for casino operators to consider switching to other providers. Now that we have gone through all the points on Buffett's checklist, we can see that Evolution AB's financials are truly impressive. It's rare to find a company like this. What's even more exciting is the valuation opportunity here. Despite its strong performance, Evolution is currently trading at a major discount with a forward PE ratio 17.8, and many valuation place its intrinsic value above $100 per share. As you can see in my live account, I currently own 8 shares, and with this intrinsic value, I consider buying more. It's a big opportunity. So if you subscribe to this channel, you will not only get to follow these investments as a case study, but also learn how to find and invest in wonderful companies. In an upcoming video, I'll dive into why there was a recent dip in the stock price and some potential risks to watch out for. These are insights from 6 years of experience, and I'm here to share them with you. So if you appreciate this idea and enjoyed this video, please give it a like. Your support really keeps me motivated to create more content like this. Thanks for watching, and I'll see you in the next one.